Hi there, I'm Tyler Bollhorn. Welcome to the Stock Scores market analysis for February 22nd, 2010. The charts that you see on screen on this table are the ones that we're going to go through, and let's get right into that now by clicking on the slideshow link at the top of the table. And that takes us into our first chart, and we can begin our analysis. This, of course, is a chart of the Dow ETF, symbol DIA. Good bounce back in the last week or so, and I think that was sort of telegraphed by what we were seeing early last week. My expectation is that this market is going to rally up to resistance here and then probably get stuck and go into some sort of sideways consolidation pattern. Moving along to the next chart in the group, this is the Canadian dollar, and it too has made a nice bounce off of support. Actually went through support during the day, on one particular day, went through that 93-cent mark. However, it's made a nice comeback, and again, it probably is going to come up to the top of this range where it gets stuck. So I'd probably be a seller of the Canadian dollar in around that 97, 98-cent mark, and a buyer down around 93. Look for a little bit more gain here before that cycle upward is over. The gold chart is improving. We have broken that cycle of falling tops. You can see here that this top is higher than this top, which is higher than this top, but here you can see that we are building a top that is beyond the last one. And so we may be making a little head and shoulders bottom here. Of course, we have a shoulder, a head, and if we make another shoulder over on the right side, well, that bodes well for gold to move back towards those highs. However, I think it's got work to do, and there's probably better places to play, although individual gold stocks could yield some good returns. This is a chart of the oil ETF, symbol OIL. I like to use these ETFs because they're just an easy way to chart some of these commodities and currencies that are otherwise maybe difficult to get a chart for. And again, oil pulled back to support, made a bounce. We're on the bounce back now. I wouldn't be surprised if it stalls in the short term, but ultimately heads up towards that resistance line there. And just to give you an idea, that's at around $80 on oil on the ETF. It doesn't move obviously penny for penny with the actual oil market. All right, moving right along, NASDAQ 100. It too has made a good bounce back after breaking its upward trend line. And that's really the concern here, is that this bounce back could turn out to be a bull trap. Now, so far, the buying interest has been pretty good, but if the market were to break downward from here, and in doing so create a falling top, then we will have confirmed the upward trend line break that happened about a month ago. So watch for that. Now, if on the other hand, the market is able to rally back toward those highs and simply get stuck at those highs, well then, as I said on the chart of the Dow, we're probably just going into a consolidation phase where the market is building a base for the next leg of the upward trend. Here's a chart of the S&P 500, really no different than the chart of the NASDAQ. Of course, the NASDAQ being tech heavy, the S&P 500 is a broader index of the 500 largest companies in the world, but their charts are more or less the same, as they often are. Chart of the TSX, it was not in that sort of upward trend that the US markets were in, and so it has not broken its upward trend line. You can see that the chart looks kind of similar to the oil chart, and that is no coincidence given the heavy weighting of oil on the Canadian market. Looks to me like we're just in this consolidation phase. I like the Canadian market longer term, but in the near term I would rate it neutral, which means you have to be stock specific in the trades that you take. And my final chart this week, as always, is a chart of the US dollar index. You can see that the US dollar index broke its downward trend line about 2 months ago. It has since formed a rising bottom and broke out from a rising bottom. That is a setup that I call a bottom fishing setup, when you get a break from a rising bottom after a break of the downward trend line. And that is a good sign that the optimists or the buyers have taken control. You can see that the sentiment stock score down at the bottom of our chart has gone into positive territory, and I think that the US dollar is going to be a good performer relative to global currencies, although perhaps not relative to the Canadian dollar. However, I do think that the US dollar is looking a lot better, and that's simply because in the global sense, the US dollar is still seen as a safe store of value. Well, that has been the Stock Scores market analysis for February 22nd, 2010. I hope that you've enjoyed it. If you would like to use this tool, it is tradingdesk.stockscores.com. If you want to use the regular tools of Stock Scores, simply go to www.stockscores.com. Have a great week in the market and trade well.